Good morning. My name is Ben Bingle. I'm the director of the DeKalb County Nonprofit Partnership, and I want to thank you all for joining us today for this webinar on nonprofit finances. We have a few housekeeping items before we get started. First, we'll be recording today's webinar, and the recording will be sent to you later by email along with an evaluation form so you can provide feedback about this training. We'll also share the slide deck and a couple of resources that our presenter has developed for us. If you'd like, you can share the recording and the other materials with others in your organization who may not be attending live right now. Please note that we have everyone on mute, but feel free to use the Q&A and chat features that are built into Zoom, or if you prefer, you can send your questions directly to me using the private chat feature. We're going to have some time for questions in the middle of today's session and also time at the end. We'll plan to have right around 40 minutes of content and then, approximately 10 to 15, 20 minutes for questions. So with all of that said, we're very excited to kick off today's webinar. We do have a slight change in that Alicia Shadaman was scheduled to be one of our presenters today, but due to unforeseen circumstances, she had to bow out. So fortunately, our other presenter, Betsy Hall, agreed to carry the torch today, and we really appreciate that. And so with that said, I want to take a minute to share a little bit about her background. As a certified public accountant, Betsy has more than 25 years of accounting and finance experience in both the public and nonprofit sectors. In the past, she's worked at the NIU Foundation and NIU College of Education. And one thing that I've noticed as I've gotten to know Betsy over time is that she always seems to be wearing multiple hats. And that holds true with her current employment. She's currently the finance lead for NIU's Division of Information Technology, and she's also the finance director at the DeKalb County Community Foundation. She's served as a board member and officer for a variety of local organizations, including the Sycamore Education Foundation, the NIU Annuitants Association, Opportunity House, and Sycamore United Methodist Church. Betsy earned her Bachelor of Science degree in accountancy and a Master's in Public Administration, both from NIU. Welcome, Betsy. Thank you for joining us today.
Thank you, Ben, and good morning, everyone. As Ben mentioned, I'm the Finance Director here at the DeKalb County Community Foundation, and I want to welcome you to today's webinar. When I hear that I have 25 years experience, it just doesn't feel like that should be true. Makes me sound like I've really been doing this for a very long time, and it doesn't necessarily feel like that. So I am excited to be here today and to talk to you guys about assessing financial health of nonprofit organizations, and then pivoting to telling your financial story in these uncertain times. So we're going to spend some time on each of these components today and leave some room in between for questions. And I look forward to seeing you engage in the various polls that we have and try to make this as interactive as possible. So before we begin, I'd like to get to know you guys a little better. If we were in the freight room downstairs, I would take this opportunity to go around the room and share introductions. I'd love to hear about why you're attending today. Oh, we have the poll up. I'd like to hear, I would have liked to hear what you'd like to take away from today's session, and also what role you play in the organization. I'd also like to share some coffee and donuts, because that's probably the best part of coming to the freight room, is actually interacting with each other and having a snack or two. So I thought the best I could do is put a nice picture of coffee and donuts on the screen for you. So in order for me to get to virtually know you, I'd like to hear from you using the poll that Ben just put up. And if you could use the chat, I'd like to see what, if anything, you have ideas for what you'd like to take away from the session today, if you'd like to share. And I need to move my screen a little bit so that I can see what's happening here. Okay. Okay, so Ben, I can't see the chat. So if you do see anything in the chat, can you just let me know? Okay, well, thanks for taking the poll. And again, I wish I could go around and meet everyone. I asked Ben if I could do that, and he said no. So
Hey Betsy, we
hopefully,
do have some that have chimed in on the chat. We
okay.
have folks saying that they also do grant writing, development work, such as a development director. Lynette from Adventure Work says telling our financial story is the draw for me. And we have Rita, who's a local consultant as well. And somebody else said how sharing the new financial status with regard to COVID works with grant writing. And we have an executive director from the public sector. So quite an array of different individuals joining us today.
Great, great. Well, thank you so much for chiming in on that, and I hope that we can achieve everything that you've put in that chat, and if not, there'll be time for questions at the end. So I think we'll move on. Okay, so today's session, and I think, is the poll still up, Ben?
No, I just took it down.
Okay, so you cannot see it on my screen, right?
That's right.
Okay, just trying to get used to my dual screens here. All right, so today's session, first we're going to talk about assessing financial health and using the financial indicators tool that we here at the Community Foundation use for grant applications. We'll review each component of financial health that we have included in the tool, and then we'll pause for some questions on that portion of today's session. From there, we're going to move on to some COVID impacts on nonprofit organizations, as well as your 2020 financials. And then we're going to end with really telling your new financial story. So that's how we're going to roll for the next hour or so. So we're going to begin with assessing financial health. So late in 2019, Tiffany McQueen Lewis, our grants director, came to me and asked if I could build a tool for evaluating grant application financials. Our grant applications have always required financial information, but we didn't really have an effective way to help understand that information or to consistently evaluate it amongst the grant applicants. So of course I said yes. If any of you know me, you know that I love spreadsheets. In fact, I have a t-shirt and a coffee mug that say so. I would have worn my t-shirt, but it just doesn't really have the same effect when you can only see my neck up. So this new tool is meant to do the following things. So first and foremost, it's a tool to help our grant making committee evaluate grant applications. We assign a score to applicants, and then we evaluate those scores when we're looking at the pool of applications. But a few other things that I think this tool does really well is that it assists our committee members in understanding your organizations. It sort of gives a deeper look into the operations of your organization. It looks at the various components and kind of gives a range of what might be a healthy indicator versus a more concerning indicator. So it really helps our committee members and our Community Foundation staff here understand your organization. And it also, I feel like it helps you as the organization understand yourself. And by going through this exercise of going and digging up 4 years worth of financial information and plugging it into the tool, I think it's an exercise that maybe makes you more aware of what's happened in your organization and the operations. And you can see the same scale that our committee members have that they can see as far as the health. So I hope that this tool gives you an opportunity to assess your own organization's financial health. I'm going to click into this Excel file, and it's a little cumbersome, so I'm not going to keep it up for very long because I know that not everyone enjoys seeing Excel sheets like I do, but I wanted to show you what this looks like. You see that we require 4 years of information, and there's 6 different elements. So this one here just has some example data in here so that you can see. I've created the tool so that you really can't break it. There's cells that are locked so that you can't erase a formula or anything like that. You're literally only plugging in information that's required. So I don't make you do any math. The tool is all set for you. So in order to complete this, you'll be taking your IRS Form 990 or your 990 EZ if you're a smaller organization, and completing the tool in the gray boxes here. So the next few slides, we're going to go through each of those components, but I wanted to show you what one of them looks like before a grant application is complete. So let's take a look at these 6 elements. We're going to take some time to dive into each one of these today, and I'm not saying that these are the only elements of financial health. I'm sure that you've probably seen other financial ratios or other indicators and maybe in other grant applications, and those are perfectly fine as well. We wanted to keep this manageable, and so we felt like 6 elements would probably give a good picture of financial health. But it also, it doesn't mean that these are the only indicators of your financial your financial health, but also just the condition of your organization. So I tried to find a good video to insert here about nonprofit financials and financial indicators. And if you can believe it, I could not find one. I tried finding Office episodes, Parks and Rec episodes, some funny clips about nonprofits, and I just can't find any. So I did tell our staff that I have made this my mission to make a good 3-minute financial indicators video that will maybe bring some humor, but also sort of wrap up all the things that we're talking about today. And I'll share it with everyone, of course, when I'm done. So let's go to the first indicator, net income. I think most of us are familiar with what net income is, revenue minus expenses. Revenue minus expenses is generally positive, and that's not always the case. And I'm sure that some of your organizations probably have experienced a deficit as well. But when we look at this tool, and when you look at 4 years worth of data, we would like to see a positive, consistent net income over time. It doesn't mean that if you have a deficit, it's going to count against you, because as you can see in the red, there's no score for this component, but a bonus point can be assigned if you have consistent positive net income. It just won't count against you if you don't. But if you're a committee member that you're looking at multiple applications, this is a good indicator of a simple net income calculation. So I'd like you to imagine pre-COVID and how this tool would be used. And so we're going to talk about post-COVID and what your 2020 column looks like later in the session. But as we go through these next 6 elements, just imagine what this would have looked like pre-COVID and what your last 4 years worth of data might have looked like. The next element is fund balance. So total assets versus total liabilities is what's defined, is what defines fund balance. If you're from a for-profit world, that's basically your net earnings. If you have seen a balance sheet for a for-profit institution. Generally, a steady increase in fund balance is a measure of success. But a decrease in fund balance isn't always necessarily bad either. Take, for instance, an organization that may have been saving their surpluses for several years to invest in a facility, or maybe invest in staff for a new program. That might actually make your fund balance decrease for a year or two. Like net income, we don't score this element, but we do give one bonus point if there's a steady increase in fund balance. And when you look at our scorecard at the end, you'll see that there's an opportunity for some engagement with the organization for a grant application if there's concerning numbers here. Next is revenue mix. And I'm sure that you've all heard that it's very healthy for an organization to have a diversified mix of revenue. So you don't want to put all of your eggs in one basket. And this element here gives a score of 1 to 5. So the more revenue sources you have, the better. And they need to be consistent. In this example here, this one would have scored a 5 because there's consistently 5 or more revenue sources. And again, this is all information that's on your 990. And here, the biggest component is contributions. Your biggest component might be grants, or it might be program revenue. It doesn't necessarily matter what the mix is. It's just the idea that, especially in an environment like we're in now, if one of those revenue sources starts to decline, you want to make sure that the others are either increasing to take its place or at least remaining steady. Number 4 is program efficiency. When you report your expenses on your IRS Form 990 or even in your audited financials, you're required to separate them between program expenses, management or administrative expenses, and fundraising expenses. So what this element does is measures your program expenses versus your total expenses. A healthy indicator is 75% of your total expenses should be on program. When you have a savvy donor that's evaluating your organization, they want to know that their money is going into the program, and it's not necessarily going to be used for administrative purposes if you have less than 75% of your the program efficiency ratio. That's one thing that a savvy donor will look at, is basically how much and what you're using your revenue on. Number 5 is debt ratio. As I look at this example, I probably should have chosen an example that had debt, but in this case, that's 0%. So if you do have debt, whether that might be a mortgage or it might be a small business loan, when we look at COVID, you're going to see that small business loans, even maybe paycheck protection program loans that aren't forgiven, they will be in here in your loans. And so the debt ratio is really designed to see what your liquidity is. And the factors here, the score is either a 1 or a 2. If you have 10% or more in this ratio, you're going to get a lower score. If you're less than 10%, you'll get a higher score. I'm sorry, there's 3 components to this score. So having debt is not a bad thing, but having debt that gets closer and closer to your assets would be a concerning aspect when you're evaluating the financial health of your organization. Finally, we have cash reserves, and I think this is probably one of the most common indicators of financial health. And what this shows is the number of months of cash on hand to cover your expenses. Generally, 6 months or more is what's considered a healthy level of cash reserves. The scoring here goes based on the number of months. If you've got more than 6, you're in good shape. But if you're up near the 10, 11, 12 months, I think a donor would question why you have so much cash on hand, and are you truly using it the way that your mission intends? So once you've done all 6 of your elements and you've submitted your grant application, this is what we use for a scorecard. So in this competitive grant process, we would have had 5 applicants, and this is the total score based on each of those 6. So there's a key at the bottom, and that key is designed for our committee members as well as Tiffany and Mark here on staff to really evaluate whether or not we need to have a further conversation with the organization. And if there's concerns that need to be either clarified or maybe there's a reason why there's a lower score. But as you can see here, applicant 3 was the lowest score. And so according to the key, there may be some follow-up required. If you're scoring 9 or below, then there will be some follow-up definitely required. Okay, so I'm going to pause there and just ask if there are any questions on the financial tool, or if anyone has used the tool that may have done a round of grants in our last fiscal year here. Again, I can't see the chat.
Betsy, we don't have any questions specifically about the tool or what you've covered so far. We have had a couple questions come in that are a little bit more broadly focused, and so I suggest we wait until the end for those.
Sounds good. Okay, well then let's move on to the second portion, which is what it sounds like most of you are really anxious to hear. And it's telling your financial story. So I think this is really one area that nonprofits struggle to do, especially if you don't have a data guru or a communication specialist on your staff. Telling your financial story is just as important as telling your mission story. And I know that's shocking coming from a finance director, but I do believe that really there is such an underlying story that you can tell with your financials, because really, when you think about it, why do you tell your story? You tell your story so that potential donors will give to your organization. You tell your story so that volunteers will volunteer their time for your organization. And you tell your story so that your beneficiaries can utilize your services, or to tell the community what you're doing. And most of those components are going to boil down to your financials. And there are all sorts of impactful data that you can include in your story, whether that's financial or not. And today we're going to get a little bit of a mix of telling your financial story, but then also telling your mission story. So here's another opportunity for you to engage. How do you tell your financial story now? And I'm thinking, I want you to think pre-COVID, how did you tell your financial story? So Ben's going to put another poll up. Well, I'm glad to see that everyone is answering with the IRS, because that is a good thing. Okay. Okay, I like to see that a good majority you're providing this in your annual report. I'm going to show you a couple of examples of that in your brochures and your constituent letters. And just so you know, when I talk about sharing your financial story, it is not necessarily sharing your full financials. It's taking a few key pieces of data and sharing those maybe within your annual report, showing the impact on your beneficiaries, but then also showing how you're managing your operations.
So Betsy, I've shared the results there. We had a couple others come in the chat, such as social media and newsletters, also through answering questions and giving information on grant applications. And one individual says they're a new organization and just got started at the start of COVID.
Okay. All right. Thank you. So I have a couple of examples from the Community Foundation. We do a report to the community, which hopefully most of the people that are on the call today actually received in the last few weeks. We send this out, it's a newspaper insert as well as a direct mail piece. And these are a few highlights from that report to the community. So the top bar with the blue bar are our fast facts, which these are things that I prepare for NOAA to include in our report to the community. And like I said, it's not our full financials, it's a few key pieces of information that kind of show how we're doing. So this is all on mostly focused on impact, but when you look at our total assets, so as a community foundation, our size is really measured by our level of assets. And so we'd like to see that asset number grow. And anyone that's familiar with the Community Foundation environment would know that as well. As of October 31st, 2019, here are some key pieces of data and in the way of financials. And so we had given out nearly $2.7 million in grants, and then awarded 104 scholarships. So those are a few key pieces how we tell our financial story. Down below, near and dear to Ben's heart, these were some highlights in our report to the community regarding DCNP and Give DeKalb County. So again, we were able to mix some financial information also with some impact information as well. So that's how we looked at our financial story pre-COVID. This was our annual report for 2019. Here we do a little bit more extensive financial reporting, where this is really an excerpt from our financial statements on the left. And we thank our donors. And this is basically the same chart that we put in year over year. So if we've got donors that have been with us for a long time and they're used to seeing that, they can see how we're growing. They can see how our operations are running here at the Community Foundation. And then another section on the right are more of our fast facts. And so these are some of those key indicators that we like to brag about, I guess, and really draw your eye to some of this financial information as well as impact information. So again, that was from our 2019 annual report. So that's how we here at the Community Foundation share our financial story. So let's talk about COVID. And everybody wants to talk about COVID. This was a survey that was done of 110 mid to large size organizations back in the May and June era, when we all thought this was only going to last a few more months. And who would have thought that we'd be sitting here in December in the situation that we are. So while we look at some of these elements here, I wonder how they've changed. I have not seen recent data on these specific elements, but it would be interesting. So let's take a few of these. 83% of the 110 organizations experienced a reduction of revenue. 71% experienced a reduction of services. When you talk about payroll, 51% of those 110 organizations laid off employees and 67% had furloughed employees. At that time, 53% had a reduction in individual giving. That's one of the statistics that I wonder will have actually gone down since the last 6 months have taken place, because we are seeing that philanthropy is still prominent in may not look the same as it did, but I really would be interested to see what that data point says today. And then we're going to talk some about the federal aid programs, but 92% of them in the May and June timeframe said that additional loan options would be helpful. And note that they said forgivable loans. but forgivable loans really aren't loans. That's more of a grant. And so I'm going to talk more about the PPP and SBA loans here in a little bit, but I thought this was a helpful visual of some things that you guys have probably been experiencing as well. So another chance to participate. Let's take a second and let's find out where your organization stands and what impact COVID has had on your organization with this next poll. Okay, so it looks like it's closed. Really good information. So compared to 2019, 12 of you have had a reduction of revenue. I'd be anxious to hear the organizations that have not, and maybe that's just specific to the services you provide. Have you had a reduction in services? So about 50-50. Have you laid off employees? The two that have, I strongly feel for you. And having been at NIU and through this crisis as well, it's been hard, and those decisions are never easy, whether or not you're in a layoff situation or a furloughed situation. It's nice to see that we have more no's here than yeses, but it's dire. And we're going to talk a little bit about the federal aid programs that are out there and whether or not that impact may be a part of the answers that you guys just gave. Okay.
Hey, Betsy, we had an interesting comment in the chat. As a property tax supported organization, we won't know COVID-19 impacts until next year when property taxes are paid.
Good point. Good point. I don't think you're alone either. I think there's other industry, nonprofit industry, they're going to have that lag as well. And we talked a little bit about the charitable giving and how many organizations have seen a decline. And once we're out of this crisis mode that seems to just be going on and on, I wonder if then that impact will start to decline. So thank you for sharing that. So I wanted to talk about a few of the federal loan opportunities, and I'm going to do one more poll. I promise this is it, of how many of you have taken any of these federal aid programs. So last poll, so I can get an idea of how many of you guys have actually received a PPP or an SBA loan or an EIDL advance. Maybe you don't know. Okay. Okay, so a good number of you have, and I'm glad. Thank you for sharing. I'm glad that to see that, because the next few slides are going to be relevant then to you that did take a PPP or or either of the other two as well. So a few interesting information items about the Paycheck Protection Program. Over 180,000 nonprofits received one. 452,000 nonprofits were eligible, and about 40% actually did receive one. Nonprofits received 7% of the total loan dollars. And then that's broken further down into less than 150,000 and more than 150,000. This next fact is I thought was really interesting, and I had to read it a couple times to fully understand it. So what it's saying is that the PPP loans protected over 51 million jobs in the US. And if the nonprofit sector represents 10% of the workforce, it's estimated that it protected over 5 million jobs in the nonprofit sector, which is significantly more by 1 million of what they had estimated. And we're gonna talk about what that meant to your organization and you know, how to treat that now on your financial story. If you've already applied for forgiveness, or if you have a finance person on staff, they probably would have already worked through these details, but I thought it just might be helpful to kind of refresh us with the requirements for PPP. If it is 100% forgiven, then that loan amount is going to be treated as income in your financial story. So it's going to look like you got a gift from the federal government. They're suggesting that you add a line item for PPP proceeds for forgiven loans. And that's what we're doing. That's what I'm seeing on lots of financial statements, is that it's just showing as a line item in your financials. If it's partially forgiven, which probably at in your organizations, it will be 100% forgiven, but if not, the portion that will not be forgiven will be treated as a liability, just like a loan, because you will be on a loan payback schedule and you'll have to pay interest on that loan too. While it's small and you have a very long time period to pay back, that's how it'll be treated. A new piece to this is the EIDL advance, which is the Economic Injury Disaster Loan Program, which is tied to your SBA loan. If you received an EIDL advance and a PPP, what they're saying is that EIDL advance portion is not forgiven and it should be treated as a liability as well. So I would think that all of you would agree with me that it was unprecedented how quickly the PPP and the SBA came out with this program, especially considering the pace that the federal government moves at. And it was clunky. It was clunky from the start. The information that was given that changed seems to be daily, and it feels like it's even constantly changing today. So those are just a couple of the specifics on how you would report your federal aid assistance here. So here's kind of a tough one. What kinds of questions do you think you're going to get after you start telling your financial story of 2020? All of these questions probably came up in your decision whether or not to take a PPP or an SBA loan. A few things that donors may be looking at your financials and asking, why didn't you apply for more? Why did you take the PPP when you really didn't need to? How are you going to pay that back if you have an SBA loan? How are you going to pay that? How are you going to pay the interest on that? How did you use the funds? And that's probably the most important question. And then did it really help? And one of the things I just want to emphasize as you start to prepare your financial story, as you close out 2020, is that there is really no wrong answer to any of these questions. Every answer you're going to give, if anyone were to question your decision on whether or not to participate in these loan programs, every answer you give will be the right answer. This has been a time like no other, and that's a given. But to answer to donors who probably have some sort of experience in this as well, is that I just want here to tell you that there's no wrong answer to any of these questions. So what does your indicator tool look like now? If you think back to our 4 years worth, unfortunately, there's not a redo for 2020. I think we all wish that was the case. Everyone has something that they wish they could redo, whether that's birthdays or graduations, sporting events, or just family get-togethers. But 2020 is what it is, and everyone will have that 2020 asterisk year. Typically, that's something that we just use when something needs to be noted. But does COVID really need to be noted? I mean, in 4 years, when we look back at 2020 through 2024, is anyone really going to forget what happened in 2020? When this first started, we kind of, commented that, oh, well, every financial report that I'm going to give now, I'm going to have to asterisk 2020, but that's the case for the entire planet. So it's not about how we're reporting, it's about what we're reporting. I'm sorry, I said that backward. It's not about what you're reporting, it's how you're reporting it and how you're telling your story of what your 2020 asterisk is going to look like. So I found this visual from a London-based professional fundraising firm. I know it's probably a little fuzzy on your screen, but it's a great visual, and I just want to break down some of these elements. So first, on the blue side, we have things that we want to tell our donors. We want to tell them all of the dire things that have happened to us this year. We feel like they should know that. But on the purple side, they demonstrate what the donor wants to hear from us. So they want to hear that we're still helping people, and they want to know that we still value their donations and why we're adapting to what's been put in front of us in 2020. So I thought this was a really good way to think about the story that you're going to start telling about how your organization managed through 2020, whether that's your mission story or your financial story. The next few slides are also from this London-based firm, from Blue Frog, and they offered some really good advice about telling that story. So focus on what the donors want to hear. Again, looking at that purple side of that visual, show what you're doing to help your beneficiaries. It's not a time to just show your need, it's time to show your relevance and how you have survived 2020 and how you've adapted. So show how you're innovating, show how you've adapted, whether that might be delivering your services from a distance, whether it may be making that difficult choice of discontinuing a service because of precautions. And then more importantly, how are you protecting frontline staff and beneficiaries during this time? And then show your donors that they're valued. This is not any different pre-COVID versus mid-COVID versus post-COVID. Donors still want to know that their support's getting through to those who need it. Those couple of keywords, asking them, thanking them, and reporting them, those are still valid today. So whether or not you're telling a financial story that might have increased debt, or you may have decreased revenue, you want to make sure that that story that you're telling is still showing the impact that your organization's making. So here's a clip from our 2020 report to the community that was actually just mailed. So 2019, 2020, it looks the same. You know, we are just updating our numbers. We're not, we have experienced growth, which is incredible in this time of year. The incredible Give DeKalb County, which a lot of you participated in, was part of that. But we did not make any changes to this to this specific item. We want to show our donors that we are stable and that we're still relevant here in the community. This next one is from YEP. And so this is NOAA's program here at the Community Foundation. And again, I'm just bringing attention that we've got financial information here. We're still telling our financial story, but we're thanking our donors. And a couple of really key areas here. I've circled the 2 time references of these pictures. If you notice, in September, our YEP students are wearing masks. In March, we were still having circular conversations of people sitting really close to each other. So if I could suggest one change to any photo opportunities that you might be telling your story with, I would say to date stamp them. And this was ingenious of NOAA to do that. And if you can imagine our 2020 report to the community, we still had a lot of pictures without masks. And so he tried to include both of those, and just to show how we've actually adapted. So just in closing, I'd like you to think about what your new financial story is going to look like. Is it going to look the same? What kind of elements are you going to include? And how is that going to show on potential grant applications? How's it going to show on your audited financials? Your annual report? There's a lot to think about. And again, there's no wrong answer. It's a year that is unlike any other, and your new financial story will still be impactful based on the mission that you are serving. So thank you all for your time today, and I'll look to some Q&A.
Great, thank you, Betsy. We have had some really interesting questions come in through the chat, so I want to dive right in with those. First, one of the things FLAP is struggling this year with is how to really basically get set up for 2021. They're looking for any advice on how to create a budget for 2021. And she asked the question, should we count on pandemic money in 2021 as well?
Well, the answer is I have no idea whether or not you should count on pandemic money. There are so many programs and opportunities out there right now, whether that's at the local level, like, here at the Community Foundation with our COVID grants, to the state level, to the federal level. And I would say if you have if you're confident that you'll be receiving some relief money, I would be conservative in the way you report that. But I wouldn't hesitate to include it. The way I'm going to be preparing my 2021 budget, which we've already done that for our operating budget here at the Community Foundation, is to really think about our staffing levels and the impact that investment markets might have on our assets. But I guess more importantly, the strategic decision of whether or not you are eliminating any programs and associated revenue that might go with that. I would start doing your 2021 budget based on every other year that you've done that. Having a few years worth and seeing what your outlook is, and really utilizing your board to help make those decisions.
Thanks, Betsy, and thanks to Alexandra for the question. Next, what accommodations need to be made for pledge-based revenue streams?
I'm assuming that means based on potentially uncollectible pledges. Typically, when you have, if you have a strong pledge base, you're required to discount your pledges anyway. So there is a discount factor. I haven't heard of any guidance that that's going to change going forward, and whether or not you would need to recognize any larger discount on your future projections of pledge revenue. I haven't heard of any changes to that.
Okay, and I don't have any more information about that question, so whomever submitted that can feel free to follow up on this if you'd like. But Betsy, do
Sure.
you have any other thoughts on generally about accounts receivable?
Um, I don't. It's really more organization specific and what your constituency is of your receivables. We might see that our auditors are coming in with stricter guidelines on discounting accounts receivables or recording uncollectible accounts at a higher level. But if you don't have, only having a year under our belt here is not a whole lot of data to determine whether or not you're going to have bad debts. So I don't foresee a significant change in that. But again, that's something that is likely going to play out in future years.
This question says, so the PPP forgiven amount will show on the P&L as its own revenue line item? Question mark.
That is what I would suggest.
Okay.
I would suggest bringing it to the attention of your financials. So bringing it to attention that it's not like an income line that you already have, because it was a forgiven loan. That's typically not a category that anybody would have. So yeah, I would suggest reporting that separately.
I'm interested in how, as a funding organization, we can support our agencies in financial areas. Do you have any ideas?
Well, doing more webinars like this.
I thought I had too.
I think that's one area I think that we can improve on. I think having that financial indicators tool is a step in the right direction for the reasons that I talked about in the beginning here, of not only using it as a tool on our side as the funding organization, but using it as a tool on your side with, potentially even with your board. It would be helpful for you to report a financial indicators tool like that to your board, maybe once a year as you close out each fiscal year.
I've heard this one a few times over the last couple of months. An area we're challenged by is creating accurate cash flow projection. With uncertainty on both revenue and expense side, it's become pretty difficult to project. Do you have any recommendations?
Sure. I'm kind of geeky in the cash flow projection area, and I like to use formulas. And so I like to use historically where your months have landed and try to then predict based on historical. So it's always difficult to try to take a shot in the dark of where your cash is going to be. And if you can actually back it up with some history, even if it's only the last 6 months, I think that's probably the most effective way to try to manage your cash.
As a new organization, what should we focus on financially? What's the most important thing that we should do right now? And this is also a kind of a smaller, all voluntary organization.
Okay, so I think establishing your set of books in a very organized way from the beginning is key. What I've seen a lot with organizations, especially on a volunteer basis, is that it's typically a check register, or it's maybe an Excel sheet. But I would invest in a tool that you can start from the ground up, rather than, in a few years realizing that you don't have much other than an Excel sheet. So there's tools out there like QuickBooks that are relatively inexpensive. I'd say picking the right tool to start that groundwork would be the most beneficial.
Just a couple more questions here. This one's quite interesting, maybe a little loaded. What recommendations do you have for how to best use our finance committee during this time? Some are very cautious, fiscally conservative, which is great, but this can be challenging when our finances look like this and we still need to spend money to operate.
Good question. Wait till you have a new finance committee. No, I'm just kidding. part of the challenge that we have as nonprofits is that we work for our board, and our board really oversees what we do. And you have to balance those conservative finance committee members with your less conservative members. And I think having a strong historical picture is the key. And so you'll likely have committee members that don't want to take any risks, but you're going to have to figure out a way to share your story, share your financial story with your finance committee to see what those risks might be. And that's not going to be easy, especially in this time. But things like the PPP loan that have just come up are really good examples of, if you took a PPP, you took a risk. You took a risk that you were going to be able to cover it, or that you were going to have to pay it back. And it was a program that no one knew anything about, but it was a risk that you took. So unfortunately, I don't have a real great answer for that question, but I feel your pain. I'll just say that.
And I noticed now that you kind of addressed this other question earlier. So is there anything else you'd like to add, Betsy?
No, other than, this in a year like this, there's so many directions that you can take your story. And I think having your board on board, having your staff on board, understanding your financials is key looking into 2021 and then looking back into 2020. And unfortunately, we can't hit a redo button. We can't redo any of the decisions that we've made that maybe weren't the best. But I believe that everyone here on this call made those decisions for the betterment of your organization, and there's nothing wrong with that. So when you start to tell your financial story, there's no wrong answer. There's only answers that make an impact on the people that you serve.
Yeah, well said. So thank you, Betsy, and thank you for all the great questions.
Thank you. These were great.
Yeah,
these were great.
Really interesting there. So that's fantastic content. We really appreciate it, Betsy, and more broadly, we appreciate everybody who joined us today. Once again, a follow-up evaluation will be sent by email along with today's recording. And as always, we encourage you to visit dcmp.org, follow us on Facebook. We have a number of different upcoming trainings and opportunities. This is our final webinar of 2020, but we have some great webinars already dialed up for January, including a grant seekers workshop where you can learn all about the grant programs offered by the Community Foundation, and a webinar on diversity, equity, and inclusion that kicks off this brand new initiative for DCMP, which we're really excited about. You can learn more about both of those by visiting our calendar of events at dcmp.org. The last thing I'll mention is that we're in the middle of our 2021 DCMP membership drive, and we hope that you'll consider taking a few minutes to renew your membership for next year. We appreciate our members so much. That includes each and every one of you. We've tried our best to demonstrate that by delivering as much bang for the buck as we possibly could this year, despite the unusual circumstances that we find ourselves in. We hope that the decision to renew is an easy one. I encourage you to contact me directly if you want to discuss 2021 membership, our membership benefits, or if other questions come up. So thank you all again for attending, and a big thank you goes to Betsy for sharing her time and expertise with all of us today. Happy holidays and take care, everyone. Thanks again.
Have a great day.